Hello everyone, and in this very video I will teach you how to use the ByBit exchange, how to register, how to do the first steps, and also I will tell you how to trade on spot and futures market, and also how to go long and short, and what are the margin modes, and how to select the leverage correctly. So let's go.
So hello everyone, and in this very video I will tell you how to trade on the ByBit exchange. I will give you the simple steps that everyone will surely understand. So if you have any questions, please write to me in the comments. So the most important thing that you need to know about the ByBit it is that according to the derivatives information, this exchange is in the top 10 by coin market cap. Sometimes it's on the 8th place, sometimes it's on the 3rd place, but anyway it's in this top 10, and it's not a no-name exchange. It is a very well-known one with an excellent reputation, and it conducts many interesting activities and many cool projects were released on this exchange with the help of their launch platform. So at first what we need to do is to register on the exchange and deposit it.
So friends, now you can register on the ByBit using the link in the description and get the best conditions because I have concluded a partnership agreement with the ByBit exchange and I'm an official partner, and that's why I can provide you with these best conditions for sure. By registering now using my link, you can get up to $30,000 for a deposit by fulfilling the conditions of the exchange in terms of trading volume. And you will also get the good discounts on commission on the spot and on futures trading. And also, in case of any dispute, you can write to me directly, and if you're registered by my link, I will send your question directly to the exchange manager and your question will be solved in a matter of minutes. And after this registration, I recommend you to pass through the full verification.
Recommended to identify your verification at least up to level 1, and in order to use all the benefits of the ByBit exchange. So we can top up the balance using a card or P2P system, or just buying a cryptocurrency and sending it to this exchange. So if we're talking about the ways how to withdraw cryptocurrency, then the same methods are available. They are withdrawal to the card, withdrawal via P2P system, or withdrawal of the cryptocurrencies. So after the balance is replenished, the money will be credited either to your spot wallet or to a funding account, and if the money is in the funding account, then you need to transfer it to a spot wallet like this, and now you can use it for trading. To trade, we need to click on the spot trade, choose the coin that we want to buy, for example it's Bitcoin, and actually this kind of trading is the safest one because we do not trade with connecting leverage, we just buy this equivalent of cryptocurrency for 1 USDT. So there's a chat for displaying price changes, an order book, recent trades. Actually to buy we need to go to the section with this buy button. Next we select the limit order, conditional order, or a market order. According to the market, this is the easiest way to buy cryptocurrency because you just specify the amount you want to buy and the exchange executes your order for you according to the order book. With the limit, you buy or sell at the price that you specified in this limit. Here you can already set the desired equivalent of the currency you want to buy or sell, and in conditional one you set the conditions under which your order will be executed. So there is a trigger price, this is when your order is activated and in which conditions to buy on the market or limit. So you need to keep in mind that with a small decoupling of the price and the large volatility in the market, your conditional order may not have time to be worked out. That is, the price will trigger the order itself, but the limit price will no longer fit the conditions. Now let's look at how to make a conditional limit. For example, to sale, we set a trigger price higher than the order price and set the amount. We do the same to buy, however when buying you need to specify the order price higher than the trigger price so that your order could be successfully executed. So we will also consider conditional order for the market. For this we set a trigger price, for example, to buy and do it with the market. The same thing happens for sale. We also set the trigger price and then we fill it in the order book on the market, while our conditions will be fulfilled and other users will have their orders executed. So to trade futures, you need to go to the derivative section, and there are different types of contracts, and the most popular one is the perpetual contract. The interface itself is very similar to the spot trading, and in fact the very idea of futures is also similar to the spot trading. If you talk about the interface differences, there is the second price here. This is an index price that is based on the several exchanges information, and therefore when the liquidation price is reached by ByBit, but the index price hasn't reached this liquidation yet, you will not be liquidated. We also need to transfer money to a futures wallet so that we can trade. In order to start trading futures, you need to choose the the type of margin, isolated or cross mode, and choose the leverage. Now let's discuss this. The isolated margin uses only the amount in the trades. Cross margin uses your entire available balance on the exchange and active trades. That is, during liquidation you will lose not only amount of your trade, but also all the resources that you have. And all open trades will be closed if there are any of them, and all your money also will be lost. If we talk about the leverage, then this is a multiplier, and as for the fact that futures trading is similar to the spot trading, it's because here there is also another book, there is a chart, there is similar sections with buying and selling, but there are some differences. As I have already said, this is an isolated margin and a cross margin modes and the leverage, and that is a multiplier. And if we talk about the spot trading, then we have always one-time leverage. Here we can choose different types. For example, it's 5-time leverage, and if I select conditional 5 times leverage and isolated margin mode, then with a trade amount of $100, I will be given this $500 cryptocurrencies in borrowings, and if a price increases by 20%, I will earn 20 times 5. It is $100. This is, I will earn not from my initial amount, but from the borrowings. So 20% of 500 is $100. If price decreases by 20%, I will be liquidated accordingly. In the case of cross margin, the trade will not close by 20% with the available free balance, and it just may go even more negative. It will be liquidated only with a zero balance if you have it on the exchange. So let's talk about longs and shorts. Long is when you buy cryptocurrency. So let's take an example. I will go long and buy bitcoins for $10 with 5 times leverage. Accordingly, if the price increases by 10% at the moment of closing the trade, I will earn 50% from my initial balance, and if I go short with 5-time leverage for $10, I will open a trade of $50 and the price falls by 10%, I will earn 10% of $50 here. Actually, we can take profits and stop losses here. It is very necessary for the reason you can completely lose your money on futures trading. What I mean? I mean the liquidation. Because if you're talking about the spot trading, then in any case you will have coins left and they can grow in the future, you will not lose them. As for the futures trading, then you borrow money and if you don't have the proper collateral, you're liquidated. Then you will have zero free balance that was used for an isolated trade. And you will not have any tokens left at all and that you bought, because they will be taken away at the moment of liquidation for sale or buy, depending on whether it is long or short position. The difference will be off from your balance. It is also worth mentioning about funding on futures. So funding allows us to understand the position of the markets in the current time period. Who requires more leverage? Short position holders or long position holders? In very simple terms, funding is the difference between the spot price and the price that is on the futures. Because with the large openings of short positions, the futures price will be lower than on spot market. When it's a bigger openings of long positions, the future price will be higher than on spot market. And if it's a bigger amount of open short positions, the difference is paid to long position holders. When it's a big amount of open long positions, then the short positions holders are paid here. Funding changes the specified time interval. On many exchanges, this is 8 hours. That is, even if you have opened and closed your futures trade at the same price, for example, you went long at a certain price and closed it at the same price, or you went short, and you can still have both profit and loss, because you need to keep in mind the funding that was at the moment. And it is also worth not forgetting about the commission of the SEX, which you can have here.
So guys, now I hope that you understood everything about the ByBit exchange, how to go long and short, and what are the leverage modes and margin modes. And if you have any questions left, please write to me in the comments. And also I am remembering you, and also I am reminding you that you can get the deposit up to $30,000 if you register using my link in the description under this video. Thanks to my partnership with the ByBit exchange, I can finally provide my favorite subscribers with the best conditions ever. So follow the link in the description and let's trade together.